Investors were betting on US-China headlines this week, but we think inflation is the bigger story. Markets ended the week mixed after largely ignoring hot inflation to focus on a high-stakes US-China summit that ultimately underwhelmed. Let's quickly recap. Monday drifted higher despite US-Iran tensions simmering. Weekend negotiation hopes vanished, and markets continued to largely ignore the impact from the ongoing standoff. Tuesday started with a sharp drop on hotter inflation, but a late-day rally clawed back most of the loss. Deja vu on Wednesday, with producer inflation also higher, but tech and AI optimism for the US-China summit kept investors positive. Optimism continued on Thursday as stocks continued to rally with AI chip sales restrictions lifted. However, Friday gave up the week's gains as the summit ends with plenty of fluff but nothing really concrete. So what's the deal? Well, inflation is definitely back. Consumer prices sharply spiked more than expected in April. And it wasn't just energy. The inflation is spreading into other categories as well. Meanwhile, producer costs spiked as well. Markets may have shrugged it off, but the bond market didn't. Investors are no longer pricing in rate cuts this year. In fact, a rate hike instead might be starting to be priced in. So what now? Well, with the summit hype over, we're starting to see a delayed reaction to the hotter inflation. Next week, investors will be dissecting the Fed meeting minutes for clues. However, AI might steal the spotlight again. Market leader Nvidia reports earnings and may need another massive beat and raise to keep the rally going. Stay tuned for more updates next week.